One of my first ever memories, just being a young lad, was me and my mum and my brother. We were in this really cold, dark, damp room with this itchy brown blanket around us, and we were sharing from a cold tin of spaghetti bolognese. And I just remember saying to myself, I want us to have a better life.
Wow.
One day, I want to be a multi-millionaire. And I've personally raised over 11 million pounds in joint venture funding. I set up my own business, and within the first year, I'd made £1 million, and I bought my first property in Spain. However, now in 2026, it's definitely more of a buyer's market than a seller's market to every property deal. And you've always got to know, what is my worst case and how could I exit this in the future if things go against me?
Hello, everyone. Welcome to Property versus Trading webinar today on the podcast today. So, property versus trading purpose. Let me just give you a quick introduction on the purpose of property versus trading. It is really to introduce you to the two asset classes of diversification to minimize your risk and increase your returns. For traders, it is to know one additional asset class that they can put their money to work further. And for property investors, to learn an additional passive cash flow stream that they can possibly reinvest back into properties as well. Now, today's speaker, really excited to have him here, and I'm really very grateful that he has had time to come and join us here, is Liam J. Ryan. So Liam is a Forbes featured 8-figure property entrepreneur, best-selling author, mentor, host, international speaker, and co-founder of Assets for Life. An entrepreneur from an early age, Liam began selling his services at just 6 years old. Can you believe that? Charging £2 to perform Michael Jackson dance routines. That drive soon evolved into washing cars, selling sweets at school, delivering newspapers, all before the age of 15. With a natural passion for sales and a relentless mindset, I can definitely affirm that. He's got absolute relentless and resilience built in him. He has now built a really successful sales and marketing business back in the 20s when he was only 20 years old, and then later launched a renewable energy solutions company. Today, Liam is a professional property investor, property trainer, international speaker, inspiring audiences with his entrepreneurial journey, resilience, and practical approach to creating lasting assets. Liam, welcome to the show.
Hey, welcome. Thank you for having me here today. And I'm really looking forward to sharing as much knowledge as I possibly can with your incredible audience.
Thank you so much, Liam. It's always a pleasure to have you on board. I've seen you speak on stages and everything, always resonated with your energy. So, you know what? Just so that people can understand a little bit about you and your background, maybe it'd be good to start from there. So I know I told a little bit about you when I was introducing you, but maybe it'd be good to hear from you. So how old were you when you first started into getting into this world of property? What event triggered your interest? And do you do other things along with property?
Yeah, so for me, entrepreneurship, investing, it all started many years ago. My mum and dad broke up when I was just 2 years of age. And one of my first ever memories, just being a young lad, was me and my mum and my brother. We were in this really cold, dark, damp room with this itchy brown blanket around us,
Oh,
and we
wow.
were sharing from a cold tin of spaghetti bolognese. And I just remember saying to myself, I want us to have a better life.
Wow.
One day, I want to be a multi-millionaire. And I associated having a lot of money with being happy.
Hmm.
That's not always the case, by the way, as I'm sure we'll get into. And I just had this internal drive from 6, 7 years of age for greatness and relentlessness. And I became the kid at school that could get you whatever you wanted. I used to go in with two bags, my school bag I wasn't that interested in, and then the Reebok bag with the jeans and the perfumes. And I really enjoyed hustling. I really enjoyed working and knocking on doors for Zenith windows. And I actually started property investing in my early 20s. I bought my first ever property at the age of 22. I was
Oh,
working for a I'd spent about 18 months working for a lead generation company in Spain. The company went into liquidation. The business partners had a falling out. And then one of their legal team, who I'd built a relationship with, approached me and said, "You're fantastic. You've been the top salesperson. Why don't you set up your own lead generation business? We'll
mm.
show you how to do it. We'll take a percentage of your turnover." And that's what I decided to do at the age of 22. I
Oh.
set up my own business. And within the first year, I'd made £1 million, and I bought my first property in Spain.
Oh, wow. That's a really amazing story, isn't it? It's really nice when you get such bosses as well, right, Liam, who really supports you, who really guide you as well. So I guess you're very lucky in meeting those kind of people along the way. And I always like this part because, when you look back at your life, you can see how everything connects together and brings you to where you are today and the person that you are, isn't it? There's a beautiful orchestration of events, Somebody is looking after us, definitely.
Yeah, I believe we're guided to the right people at the right time. And then it's the actions that we decide will
Yeah.
either guide us to greatness or take us away from greatness. And I'm very much a yes person. And
Mm.
I'd rather fail trying than not, than fail by not doing, if that makes sense.
Oh, yeah, absolutely.
And even through failure and even through struggles and hardship, there's always a learning.
Mm.
And that's just been a philosophy of mine since eating that cold tin of spaghetti bolognese at the age of 6.
Oh, wow, man, that's crazy stuff. But yeah, thanks for sharing that. Very inspiring, very, really, really inspiring. So going into your style of property investment, so just to give some context, just for the traders and the property investors in the room and who are listening in. So in trading, right? So you might know this as well because you look into those areas. In trading, we got different types of traders. Okay, so some traders which are called position traders, they hold it for very long periods of time. You're talking about 6 months, a year, 2 years, 3 years, something like that. And then you got your swing traders, which is more days and weeks. And then you got your intraday scalpers, like just within the day, and then they just enter and exit. So similarly in property, I've heard that there are different types like flipping, buy and hold for yield, and then capital appreciation, and so many more. So, what is your main style of property investment or the ones that you teach?
Yeah, it's a really good question, and it's important for people to understand because most people just see property the old vanilla way, which is buy to lets.
Hmm.
You know, you work really hard, you make some money, you save up a deposit, you buy a house. You work really hard, you save up some money, you get a deposit, you buy a house.
True, yes.
And even though that has worked for lots of people, it's not really the way in 2024, 2025, and we're now in 2026. There is something called the property matrix. And this is something that I teach. I'm actually running a 3-day advanced training here at the moment here in Essex. And I've just been talking this morning about the matrix. And the matrix consists of 6 main property categories. And within those categories, you've got multiple exits and multiple rental scenarios. So I'll just give an overview of that because I think
Yeah.
it could be really important for the audience. So at the lower levels of the matrix, you've got things like deal packaging, rent to rent. So deal packaging is you buy and you sell property deals. You find deals and you sell them on to investors and you get paid to package a deal. Rent to rent is where you rent a property from a landlord, and with the right legal framework, you can sublet it and then use that as a HMO or serviced accommodation. Then you've got something known as lease options, buy now, pay later. You've got flips, go and buy dirty, horrible, smelly, disgusting houses, add lots of value, flip them
Mm.
on. You've also got BRRR, buy, refurbish, refinance, and then rent out. And then you've got your land developments and you've got your commercial conversions on top, which are what I call your big hits.
Mm.
What I believe is that you should be building, certainly in 2026, a diverse portfolio of multiple streams of property income, so you're protected and so you have different outcomes. Now if you try and do all of that at once, you're going to fall flat on your face. So what's important is to build a matrix that is going to give you the outcome that you and your family are looking for, going to keep you safe. The number one rule with property investing: you must protect capital.
Mm.
It's not about making the most amount of money. It's about making consistent money over a long period of time. So having an idea of what your matrix could look like, and then what's important is to get laser focused for that first 90 days on what I call your primary strategy. Get some results, get some wins, build your confidence, put in some offers, secure one or two deals, and then that's your domino effect. Because when you knock down one domino, it knocks down another domino.
Mm.
Now, I've done all of those strategies,
Mm.
and for me, I've done bigger deals. For me, I still like buy, refurbish, refinance, and rent out. You own the property, you get a mortgage, you get great tenants, the tenants pay the mortgage, and make sure you're in an area where there's expected some good capital appreciation, and you let time compounding do the work for you.
Nice. That's really, really good. You know what? As I was listening to that, actually, Liam, it sounded like I was listening to myself because, most of the principles that you talk about, we talk about the same thing in trading. The first number one thing. I mean, in fact, we say forget about the upside. Your main thing is protecting the capital. You preserve your capital, right? It's all about risk, risk, risk. And then we also talk a lot about consistent cash flow. And another thing that really resonated with me, you said, yes, there's a lot of strategies out here, but you just focus on one first, right? For the first 90 days. And you're absolutely right, because if you don't do that, then you just don't get good at anything. You're just a scattered chicken, isn't it? Just running around everywhere. And you just don't want that. I mean, I guess we all learned that, I think, after doing all of this. I've done all of it before. I've run around, looked at different strategies, and you're getting nowhere, and you got no choice. But life pushes you to, like, what, focus, just take it easy, patience, and I mean, those are values that you got to also master as well. So thanks for sharing that. So that was good. It's good to hear that you like the BRRR, the buy, refurbish, rent, and just one quick one. I think we'll come to that later on. But on the rental, do you do? In fact, shall I ask you maybe later? Yeah, I'll ask you later on that. I think I'll come back to that. Now, the other thing is about entry. So, in trading, so maybe at this time, maybe it'd be good to share this screen here. I know that gold is quite a favorite topic at the moment. Here I'm on TradingView. Some of the traders will understand this, but even if you don't look at financial markets, but the basic thing what we are showing over here is that you see over here as it went to that top over there, it does a retracement, isn't it? Because of course, people think it's overvalued, so people start to sell and all of that. So this is what we call a retracement phase. So in trading, we look at that to capture a turning point. So if you still believe the trend is on the upside, you wait for the selling to finish. You're looking for this turning point here. As much as near as possible, you can't catch the bottom, of course not. Or maybe if you're lucky, you do catch it. And then when it's back in momentum, then you ride the upside. So like that, similarly in property, right? What I want to ask you is, So how do you guys do it? So is it more like value investing where you buy below market value? And I know that's quite a common term, BMV. Or so basically you're looking for properties which are below the market value, like 20% discount or something like that. Or are you looking more on yield? You don't care if it's good location, even if it's not BMV, you will get it and you would just rent it out. So is that like a concept to all your property investments that you take? So it'd be good to hear your views on that.
Yeah, it's a really good point. And look, the most important thing is to buy a great deal in the right location, have a long-term view,
Mm,
and make sure that you've got the correct end user buying that from you or renting it from you. And it's important to provide an exceptional service and make sure your product that you're putting to the market is better than anybody else's.
mm,
This way, you're going to attract the right tenants at the right price. Now, a lot of people talk about below market value,
mm-hmm,
but over recent years, it has been challenging to get below market value deals.
mm-hmm,
So I'd rather buy at market rates than not buy at all because I buy for long-term capital appreciation and the rental income. However, now in 2026, it's definitely more of a buyer's market than a seller's market. And
mm,
there's a lot more opportunity where you could be picking up deals 20, 30, if not 40% below market value.
mm-hmm,
Many areas in the country this year, and if you look at central London, there are
mm-hmm,
many areas, not that I invest in central London, but it's still a good hotspot. You can pick up properties in places like Kensington and Chelsea and Battersea. You can get places in some cases 40% below where they were a few years ago. So now is definitely a great time to buy. But look, we're not looking to buy at the lowest and we're not looking to sell at the highest. We
mm-hmm.
just want to buy decent properties at a decent price. And if you can get it 20 or 30% below market value, then that's like the cherry on top.
Nice. Yeah,
What,
definitely.
what, what, what's important actually when you go and speak to motivated sellers, and there's a lot of them out there right now because this country is in such turmoil
Mm,
and people are really struggling in most cases financially. Taxes are up, cost of living is up,
mm-hmm,
people's jobs are being taken by AI. It's a very, very difficult time for millions of people in this country.
mm,
What is very important, yes, go and speak to motivated sellers and pick up below market value deals. But under no circumstance should we be, let's say, taking advantage of anybody. My philosophy, you must have a win-win. Now, if
nice.
that means I could get it for, say, 150 grand, but that would put the seller in some type of distress. But if I buy it for 165 grand, the seller's going to walk away with what they need. Then I just feel it's better to be fair. You get a good deal and make sure they get a good deal.
That's brilliant, Liam. I think the last part that you said is really struck home, really. I think it's got to be a win-win. It's important because I've seen some people in this game, they're quite like real sharks, aren't they? Like they just don't care about the other guy. They just all in it for their own benefit. And it will just rip them off as much as they can, and they just care about them going up further. So the last part that you say is really, really important, and I hope that everybody, listening in, really imbibe those values. I think even in our trading in our company, we follow the same values. What we get, what we earn, everything, we just recycle back that into the community and back into the trading, so that the clients also get better, stronger products as well. So I really resonated with that. Thanks for sharing that. In terms of, yeah, just a quick question on that one. In terms of motivated sellers, you mentioned, is there any tips you have to find them? How do you find motivated sellers?
Okay, that's a really good point. That there's lots of ways to go and find deals. You can run Facebook ads and do some type of marketing campaign and put money into ad spend. You can go to networking events across the country. You can post on Facebook and into property school groups and Facebook groups. You can advertise on your own websites. You can go into the portals. But actually, of the £33 million worth of deals that I've done in the last 12 years,
Mm-hmm.
almost all of my deals have come from agents.
For
So
agents.
I've just been really good at finding great agents to work with and building great relationships. Now, there's other people that I teach and mentor, and they find most of their deals from auction houses
Oh.
or direct to vendor campaigns. What you've got to do is find what works for you.
Mm.
And I believe anyone starting their journey or looking to scale, a great place to start is certainly the agents. So that's a really good place to start. Get the agents working on side for you. And another great place is the auctions
Mm.
and being part of the auction houses. And you can go on Google and you can find your local online auction houses and understanding that process. Just remember, if you go to auction, when the hammer goes down,
Mm.
you've got 28 days to complete. So make sure you've looked at the legal pack.
Mm.
If you can, go and see the property and make sure you do the relevant research. But yeah, auctions have been really, really, really hot lately, and they're sort of coming back into their own where people are getting some good deals because it's quiet. You know, people are not buying. The smart people are buying, like me, and
Mm.
people I teach. But actually, most people are sitting on the fence right now because of all of the scaremongering, what people are hearing on the news and the government
Correct.
and this law change and
Yes.
interest rates, and it's getting more
Yes.
difficult for landlords. And a lot of that, to be fair, is just scaremongering. So people sit on the sidelines because your major financial institutions, the subsidiaries of Lloyd's Bank, BlackRock, they are buying up a lot of property in this country.
So true.
So you've got to observe the masses and then do the opposite.
Absolutely. It's crazy that that last line that you say is the exact same principle we do in trading as well. So
There's
don't
lots
follow
of
the,
similarities, isn't there? There's
of
lots of
course,
similarities between trading and property. It's great.
because the principles are the same. They're all principles of investment, right? And that follows on with the book of Ray Dalio as well, principles, isn't it? Think in terms of principles. And I always say
Yeah.
principles are cross-transferable, but specifics will change depending on any asset class that you look at. Now, actually, coming into these economic conditions, right? So I thought this question would be quite relevant as you are saying about all of this, about the landlord rights changing, the economic conditions, especially with the Prime Minister just resigning as well, right? Can you believe it? Just 2 days ago as well. So there's a lot of fear and all that. So what I wanted to ask you was, when you buy your properties, I think you kind of mentioned it. So do you actually look into the individual property in question, so its location, circumstances, and all of that, or do you also position yourself with the overall market conditions as well? So do you look into that? I mean, the overall market conditions, as I mean, like, like interest rates and all that, will it go up and this, and how much will it affect? Or you would just look at the property itself, does it make sense, and you just go ahead with it?
Yeah, well, it's a really good point. And like most things in property, it does depend. I believe the best way to approach property investing is take every deal on a case by case basis.
Right, right.
And of course, you want to follow a set of principles and you make money when you buy. So what's important is that you buy it at the right price.
Mm,
What's also important is you always know what's your best case scenario and what could be your worst case scenario.
mm,
So if interest rents went up 1, 2, 3%, how does it look? If the market dropped 20 or 30%, how does it look? And as long as you're okay with the worst case scenario, and you're willing to ride the trend or ride the storm, and you're always going in with a long-term view, and you've bought in the right location with the, like, having the right amenities around is really important.
Mm.
Providing a service that, because people are always going to want to rent. There's a shortage of properties in this country to rent.
Mm.
The demand for rentals is the highest we've seen it, I believe, since the 1970s.
Oh, wow.
And rents have gone up really high over the last couple of years. We're not going to be a decreasing population. We're going to be an increasing population. People need affordable housing. So I would much prefer to buy something slightly more expensive and have it in the right area than try and go and get something really cheap but have it in the wrong area.
Mm.
A lot of people just want to buy cheap, but then they may have problems later down the line with the types of tenants. So, so, so you got to be smart with what you're doing, and you need to be looking at all the facts. So we do factor in lots of things. We factor in the rents, we factor in the costs, we factor in the interest rates, we factor in the economy, but we make our buying decision using a deal analysis. So we
Mm.
take out all of the emotion. And if the deal analysis says buy, then you can make a decision to buy.
Nice. I like the whole structured, systematic manner before you enter into the property deal, isn't it? In fact, it's the same thing. We have done all our pre-analysis before we enter into a position. And I really like that part where you said you you actually factor in for the best case scenario and the worst case scenario. And in fact, in trading, we call it to cover for all the what if scenarios. What if this happens? What if that happens? You cover all of that and you write your rules accordingly so that you're not shocked when that happens. But I must say at this point, and I think you would have mentioned this or people would have already figured it out, that sometimes worst case scenarios, not everybody is able to project that and anticipate that. And that's when I really feel that you need an experienced person to really guide you. And that's when really a good mentor who's really been there, and gone through the trenches, got the t-shirt, can really guide a person who's really going to start on that journey. Would you agree on that, Liam?
Yeah, I'm 12 years in now to, let's just say, my latest property journey, but I also did property um, in my early 20s, and I
Mm,
made a lot of mistakes and I lost a lot of money because I didn't know what to buy, when to buy, how to buy,
mm,
and I didn't buy in the right location. So for the last 12 years, I've invested heavily into great property and business mentors. And
right.
even today, I still have my great mentors. Of course, I mentor people as well. And Assets for Life is the UK's leading property business and wealth training organization. So, yeah, mentorship and being part of a good community where you share the same values, you've got the vision, and everyone's going to have each other's backs, where you have someone as a sounding board
Mm,
just to sense check what you're doing.
mm,
I think one of the most important things about mentors, a good mentor will help you reduce the amount of mistakes that you make,
nice.
and will fast track you through a certain process, and will shorten the time frame, reduce the risk, and maximize the reward. And what's that worth to somebody? I believe it's priceless,
Of course.
because be it you're investing in the market £1,000 or 100,000, or you're buying property deals, we've all worked really hard for that cash.
Mm,
And having a great mentor there to sound check it, I think is a really good, safe investment for the success you want to achieve.
absolutely. Strongly, strongly, totally agree on that. On the other thing, and this would be good to hear from you, right? Because of all the years of experience and the mentors that you've been with as well. Would you say in all these years, Liam, like, is there a best property investment that you've done to date so far? And when I mean best, How would you classify best? Would best be the best lesson learned or highest yield or capital earned? So that'd be good to hear from you, actually.
It's a great point, and I don't believe I've been asked that question for probably a long time, if not before. But for me, I just see every property deal. I, I keep the emotion out of it.
Nice.
I purely see it based on an investment decision. And a best deal for me is just any type of property deal which pulls a profit. Some of
Nice.
my deals will pull more profit than others. Some are bigger than others. Some take longer than others. It depends on what your appetite is.
Mm,
And for me, if you are, if you consider a best deal something that's going to make you the most amount of money, then all of a sudden greed and emotion can kick in. And that's
yeah.
where people make mistakes. So for me, it's case by case. Is it a safe deal? Minimize risk, maximize return.
Mm,
Am I able to get all money out at some point in the next 3 or 4 years? What's the return on investment? How much time is this going to take me? Like, if something's going to take me a lot of time, but my value is to have my time back, but it makes a lot of money, then that might not be the best deal. So I want to grow a portfolio consistently that makes good profit, that
mm.
doesn't take up much of my time. That for me is what a best deal looks like. Not based on the size and not based on how much money.
Nice. And do you get those kind of deals quite regularly? Or I guess if you do, or if they don't fit into the checkbox, I think you won't participate in that. Is that right?
Just repeat that again for me.
No, I was asking you, I mean, do you get those kind of deals that you defined as the best quite often, or is it that I guess if they don't fit the checklist as the best, I don't think you would participate in it. Is that right?
Yeah, look, I get a lot of deals sent to me that other people might feel great, and a lot of people want to do big deals.
Hmm.
I don't necessarily believe big deals is necessarily the way to go in this current market because
Mm.
the market has been unstable. It's more challenging to sell. You can go and build 10 houses, but if you can't sell them, it's an awful deal. You could
Mm.
go and do a commercial conversion and take an office into 20 flats, but if you can't sell them, it's
Mm.
going to be a bad deal.
Mm.
So I just believe in this marketplace. And of course, some people have the appetite to do 50, 60 builds. I like, if I'm developing now, having done 26 unit deals and 4 unit deals, I like anything sort of sub 10 units.
Okay.
But getting into something where you can get in and out within a couple of years, and I'm talking about developments now, in and out within a couple of years and walk away with a couple of 100,000, I think's a smart move because you got to buy, you got to build or convert, and you got to sell. I get loads of people say, yeah, £2 million, £3 million. To be honest with you, I'm not interested. Because the higher the reward, the higher the risk. Now we have to
Yeah.
take risk, but I'm 45, I'm not 25, and I've built some nice stuff. For me, it's about stability,
Mm.
scalability, predictability, and just continuing to get good wins as much as I possibly can. So
Yeah.
most deals I get rid of actually.
Nice. I think it absolutely makes sense. I think this is one thing I believe the audience will take away is whether it's trading, whether it's property, or whether it's long-term investment in the markets, the principles remain the same. One is you must be so clear what exactly you want, isn't it? And if it doesn't hit your checklist, you just step away. And for that, I guess years of training and experience really will help you. And I can't reiterate enough that having a good mentor on your side will definitely help anyone over here. And of course, listening to you, I guess that's why one of the reasons why you are now actually known as the wealth mentor, because what you're talking really, Liam, is principles for anything, really. I mean, principles for any kind of investments, whether it's business, whether it's property, whether it's trading, because it's the same things that we do as well. It's always about minimize the risk, calculate the risk. And I would say, you know what? if people can learn this when they're young and really know how to manage their energy rather than going all in and taking big risks, I think they will go so far high later on in their lives. In the other thing, what I wanted to ask was, so yes, this is an interesting. I want to see how you guys actually handle it. So in like a recession, right? Let's say the market goes down by 30%, 40%. Banks usually stop lending, right? Or the interest rates go up quite a bit high, or they get very strict on who they want to lend to. But at the same time, of course, you're getting really good bargains. So how do you guys go around this then?
I think a recession is a great time to be buying because you're going to be picking up bargains, aren't you? But what you could do, you obviously use your own money and you go and buy things for cash, and then you just sit on it and you don't refinance it perhaps until interest rates start to fall.
Hmm.
Or you just make sure that if you are then going to go, and look, we don't know what's going to happen interest rate, if they're going to go down or they're going to go up. So you just don't know. So you have to make decisions based on the information you have now. And if it means that I can refinance and the interest rates are higher than what I would like, but I'm still going to cash flow and I can buy, refurbish, refinance, and pull out most of my initial investment capital, if not all of it, and get a house for free, then it doesn't really matter what the interest rate is, does it? As long as you're
Mm,
covering your mortgage and as long as you've got a bit of cash flow, then great. Again, it's not about making the most amount, and it will balance out over a 10,
mm,
20, or 30-year
mm,
period. Sometimes you'll get deals 40% below market value. Sometimes you'll pay market value. Sometimes your interest rates will be at 1% or they'll be at 6%. So remember, what you're looking to do here is you're looking to build some type of balanced portfolio. But in my view, whatever's going on in the economy, be it we're in a recession, we're in a bust or a boom, be it we're in war or not, be it interest rates are high or low, GDP figures are high or low, or we're going through another prime minister change,
mm-hmm.
there's always good deals to buy no matter what. So I believe you should be buying always or controlling, but you just need to do it on a case by case basis.
So, one small follow-up question on that. So you did mention about using your cash and then buying it and then refinance it and the interest rates get low again. And you're absolutely right. I think over time everything balances itself out. But on the point about using your cash, so the individual investor must have cash, or he must have saved up, or he must be pre-planning for all of this. So I guess one of the things why then we also tell our traders also to diversify as well, or property investors who come to us to diversify, one of the ways that they can get that extra cash is by looking into the market, shorting the markets when they go into recession, because that's when you make the largest amount of money in the shortest period of time as well. And then they can use that money to go shopping and buy all these really cheap property deals. Do you have any other suggestions for people to get that extra cash to put it down and then to buy those cheap properties?
Yeah, great. So I'm a really big believer in raising money
Mm-hmm.
and where possible, leveraging OPM, other people's money. I've had a reputation for being the money man in property, and
Okay.
I've personally raised over 11 million pounds in joint venture funding.
Mm.
So look, you can go and leverage the bank's money, you can get development funding, you can go and get bridging, but you can also go out to private lenders.
Mm.
And for example, a strategy I've done, let's just say I'm buying a house for £150,000 all in. Well,
Mm-hmm.
I can go and raise that money from a private lender. I can give them, say, a 6% return on their cash. They lend the money into my business. I buy, I refurbish, I refinance, I add lots of value. So maybe I go from a 2 bed to 3 bed.
Mm-hmm.
Perhaps I do a loft conversion or an extension, new kitchen, new bathroom. Remember, I want to go and buy dirty, horrible, smelly, disgusting houses.
Mm-hmm.
I'm going to add lots of value. I'm going to refinance. And then on the refinance, I'm able to pay back that private lender all of their initial investment capital or as much as possible, and then I've got a house for free. That's how
Nice.
you do it. You get houses for free. So yeah, you can use your own money. You can use profits from the stock market. You
Mm-hmm.
can go and use private lenders to
Mm-hmm.
raise money for property deals. You can sell stuff on eBay. You
That's
can
really
leverage money. There's so many ways in which you can get money for deals. It doesn't have to be your own money.
nice. I like that. And just this last question before we go to the next category. Airbnb sector versus the conventional, tenancy of, long-term lets. What would you suggest, or how do you decide? Is it a case-by-case basis, or how would you look at it?
Yeah, it's a great point. I believe it's down to people's personal choice and appetite as well.
Okay.
Now, I've done some Airbnbs, but I don't manage anything, so I leverage everything out. I wouldn't want to be managing Airbnbs myself.
Hmm.
But on the flip side, with single let properties, we've got the renters' right built in, and it's more challenging for landlords now, and
Mm.
tenants have more rights, and it's more difficult. So you've got to weigh up the pros and the cons.
Mm.
And that's why I believe having a diverse portfolio, maybe having a bunch of single lets and having
Mm.
some Airbnb is a good balance. If you go and do all single lets or all Airbnb, then maybe you'll become unbalanced. But you've got to also only focus in on the strategies that you're going to enjoy and the things that you're going to want to do. And if you're not going to enjoy it, you don't want to do it, just don't do it. There'll be another way to make money. And with all strategies, there are challenges,
Mm.
there are obstacles, there are different laws, there is competition. So you've got to be willing to fight. You need to be willing to commit. You've got to be willing to go through some ups and downs. Nothing worth having is just going to be given to you on a plate. And with Airbnb, yeah, you're going to have some headaches from time to time. You're going to have
Mm.
someone probably trash the apartment. Well, just get over it. It's the nature of the beast. Yeah,
Mm.
you're going to probably have a single let and have a tenant not pay you and have
Mm.
delays. Well, just get over it. It's just part and part of owning a property business. So we have to just always be aware of the downside and the upside, and then make our investment decisions based on our appetite and what we're willing to do. I work with people and they're like, no way in a million years do I ever want tenants or guests. Great. So
Mhm.
what do? They buy and sell great deals. They buy, they refurbish, they sell, they get a capital injection of say 30, 40, 50, 100K, and then they reinvest that into the next deal or another asset class. I've got people that buy, build and sell, buy, convert and sell. So whatever you want to do in terms of diversification, there will be a property strategy, I'm almost certain, that will suit most people in this country once you figure out what your outcome is, what you want to do, but what you're not willing to do, and what you're willing to do.
Absolutely. I think this point of clarity keeps coming back again, isn't it? Absolute clarity on your end outcome is so, so important. It's the same in trading as well. You know what? There's 1,001 strategies you can do, but you got to get clear what exactly is your end outcome, and everybody's situation is different. And also what your personality is. Everybody's personality is different. And sometimes I would even say that, I'll go far ahead and say, sometimes I quote Bruce Lee's quote, right? Which is, Bruce Lee says he fears a man. He does not fear a man who has learned thousands of kicks, but he fears a man who has learned one kick thousands of times, right? So absolute focus on what you're doing and really get good at it as well. And why not? If you feel that, you want to diversify a little bit, but as you said, I think the most important thing is knowing the pros and cons. And I don't think there's any strategy which is problem free. Everything will have its own problems. But as long as you know how to manage it, I think I would say go ahead with it. I think that's the main thing. Thanks for echoing that and putting it really in a nice, succinct manner. In terms of risk, now the next category, right? I know we are getting into time here as well. We've got about another 9, 10 minutes. And also the viewers listening in as well. If you've got any questions at the moment, just type it in, then we will squeeze that in the towards the end. In terms of risk, if I were to talk a lot about risk, especially in trading, right? As I think we have mentioned this quite a few times, we only think about risk, right? In fact, we forget about the upside. The upside looks after by itself if you manage the risk properly. So we know all our drawdowns and all the different factors and the parameters really very well. And we are quants as well, so we quantify every single thing. So likewise, one thing what I wanted to ask you was, what kind of leverage would you say would you recommend in the property market or that will suit to most market conditions?
Yeah, great. So it depends again on age and it depends on outlook.
Right.
If you were, say, slightly younger and more aggressive, then you might be going for 75%, 80%, if not 85% loan to value on deals.
Mm-hmm.
But as you get a little bit more mature or you get slightly older, then you might want to be sitting on a portfolio at 60% leverage. So for me now, I'm around 75% leverage on my deals, which is more than enough. But perhaps over the next 5 years or so, I may want to reduce them down to about 60% leverage.
Right. Okay. Okay.
Yeah. Yeah. But
60%.
typically 75% leverage, 75% loan to value will suit most people and is a good balance between the profitability between your cash, between money coming in, mortgage payment going out, and what you're left with.
Got you. And when you say, just to so that people get clear on this as well, is when you say 60 to 40, you mean that 40% equity inside the property and 60% loan, or is it the other way around? 60%.
Yeah, 60% mortgage,
Okay.
40% equity.
Okay, I got you. Okay. And you know what? On that, actually, I wanted to ask one small question on that, which I think will be useful for people. Um, This one, yes. When you do interest only, let's say if somebody does interest only mortgage, right? How much of the capital would you suggest or have seen in your experience would be good to pay off every year?
Well, to be fair, with all my interest-only mortgages, I don't pay any of the capital off.
Ah,
I'm just
okay.
I'm just paying the interest, and I'm hoping that capital appreciation and inflation will erode the debt over the next 10 or 20 years. Because
So what?
property prices in many places double every 10 years. And the equity uplift that you're going to have in the future should pay off the future mortgage, or at least pay off a good chunk of it.
So then, Liam, so what happens, when you say interest only mortgages, you don't pay off any of the capital, but what happens when the interest rates start to go up? Like, I mean, I know everybody enjoyed the whole ride on the low interest rates for a very long time since it started to go up since 2 years
Well,
ago.
that's why you need to sense check all of your deals at higher
Hmm.
interest rates as well. And not over leverage and not over leverage. So if you're going like 85% loan to value on interest only, then you may get caught out in the future. But if you're going at 70 or 75% and you've stress test the asset class,
Hmm.
and if interest rates go up, well then okay, mate, the profitability will come down. Sometimes you need to go through that process. But what you normally do on an interest only, it might say be 15 or 20-year term, but your initial mortgage might be for 5 years. And you can have it fixed or you can have it variable. I like to fix my mortgages. So it's fixed. And then in 5 years, if interest rates are considerably higher, well, then you'll reassess the situation and remortgage, or maybe you sell the property. So you've got to be adaptable
Hmm.
to every property deal, and you've always got to know what is my worst case and how could I exit this in the future if things go against me.
Yeah, I totally understand. I think the pre-planning is very important, and I think you mentioned it correctly, is the stress testing and all that. And also, even if you didn't see one scenario coming, is to adapt to it, isn't it? And with the current market conditions.
Right.
Great. And the last question, I think kind of the last one that I have got, I know we're coming near to time, is yes, in terms of exits. So in trading, right? So we got two types of things what we do. So we got predetermined exits, right? Where we already set the target in right from the beginning, based on our calculations and everything, based on stats and all that. or adaptable targets we got as well, according to price velocity or some of the data that we look at, which we look at a lot is open equity data. So just like that for property, before you get in, do you have usually like a predefined exit point for some of your properties, or you don't, or is it always like buy and hold forever?
Typically, it's a great point. Typically, in most cases, I want to buy, refurbish, refinance, and hold forever.
I see. Okay.
But what I want to have a good understanding on is when I refinance, what's going to be return on capital employed. So, how much am I going to get back from the deal, potentially? How much money is left in the deal? And what's going to be my return on capital employed or return of capital left in? So, what's that as a return on investment and a yield? And then I'm also going to want to have a good understanding of return of investment. So, how long is it going to take for me to get back all of my initial capital? The moment I've got return of investment,
Mm,
then everything in that deal is free money anyway. It's what I like to call infinite return.
mm.
So there are a few factors that I look at on each deal.
Nice. I like it. And do you ever change your initial decision that you may have had in the beginning? So, for example, like global meltdowns, let's say like the 2008, where the recession lasts for quite a few years. Would you have you ever considered like maybe liquidating some of the properties and buying some other better deals out there? Have you ever done that?
I had a situation where I held five HMOs in Crewe and Stoke a
Okay.
number of years back, and I got an investor who just offered to buy the whole portfolio from me. And when I sold the portfolio, I can't quite remember the numbers now, but it was about £400,000 in profit. And I thought, you know what? It's just I'm just going to sell. I'm
Mm,
going to sell, lock in that 400 grand and move it into other investments. So
mm,
you've just got to look at every deal in its own merit. And we had a situation with one of our deals in Loughton, and we were like, yeah, we're gonna refinance everything, but in the end we couldn't because of COVID, and we had to sell some and keep some,
right.
and that's just the way it goes sometimes.
That's good to just know. The last one I had was just on psychology. Like I know in investments and everything, like you said, you got to keep the greed out, got to keep the fear out. You got to have this, this calm mindset. At least to, I guess I'm getting out from here is just run the process. If you got something that works, just run the process, and then the numbers will look after themselves. So to do that, to keep always in focus for that, and to have your kind of resilience mindset that I've always seen. Do you do a lot of work on your mind and a lot of psychology work? It'd be good to find that from you, really.
Yeah. So yeah, people do tell me I'm fairly relentless. I work on the triangle: mind, body, spirit,
Oh, nice.
and you are in the center. And unless you have those three things connected, you will not perform at your highest level, and you will go backwards or stay the same. So I work on my mind. How do I do that? Meditation, the words I tell myself. I
Mm,
can, I will, I am the greatest, I'm going to do it. No one's going to stop me. So, very positive in the language that comes out of my mouth. And I'm working on my mind. I'm around good people. I'm
mm,
listening to good content. Body, work on your body. You are what you eat. So, I would say I'm a really healthy guy. I look after my body. I try and do single ingredient food. Of course, I have a McDonald's from time to time. I love a fish and chip and a Chinese, but it's all in balance. So I have a
mm,
good diet. I train, I exercise, look after your body. And then you've got spirit. And spirit is all about believing in yourself and being kind to others. Um, Treat people how you want to be treated. Keep your side of the street clean. I call it keeping your street clean. I don't need to look over my shoulder now. I've got my street is clean. I treat people with respect. Doesn't mean I'm perfect, Do I judge? Do I cuss? Do I do? Yeah, of course we all do. But I'm always mindful of how I view things, what I say to people, and how I treat people. And as a result of that, it's an internal job, not an external job. And I've done a lot of work over the years on an internal journey rather than an external journey. So remember the mind, body, and spirit. Get around great people, be relentless, and don't let anyone, anything hold you back from absolute greatness.
Absolute beautiful. Wow, Liam, it's very nice how you summarized all of it as well. That comes to the almost to the end of our session, and also people listening in. I mean, it's incredible listening to all of this because I think of course, we kind of knew, but it's good to reinstate that, the principles for any kind of investment, whether it's the property or the financial markets, is pretty similar, isn't it? And people can take advantage of both of that. In fact, those of you listening in, you'll also get one of our free trading courses just to get an overview about the financial markets. And for those of you traders who are already part of us, will also get access to Liam's materials as well. So we'll send out the links. Now, based on that, actually, the last one was where can people find out more about you, actually, Liam?
You know what? They can head over to the website www.assetsforlife.co.uk. My company is a property business and wealth training company. We've got resources on there, we've got events on there. So register for one of our free online events. Come and hang out with me and the team. And if there's an opportunity to build a relationship with you, then great. There's a nice quiz on the website as well where you can do the property investing quiz
Is it this
to
one here?
find
I
out
think
what,
this one.
yeah,
This
to
one.
find out what type of investor you are. So that's a really, really good questionnaire.
Oh, that's really good. Yeah, maybe I might give it a go later. Definitely.
Yeah, do, yeah.
That'd be good. You know what, Liam? Thank you so much for your time. I think those of you who do not know, I mean, Liam is actually currently doing a 3-day event, and he still was kindly took the time out just to do this interview and on this show over here on the Property versus Trading show. So once again, Liam, it's such a pleasure having you on board. And those of you who we didn't get that much time on the questions, but if you want to just email us your questions and then we can send it off to Liam as well. But other than that, Liam, thank you so much once again for taking your time out to come on the show. It was really a great pleasure. I've always heard you on the stages, and we met at AdCon and all of that. But it's really great to do this interview and share this priceless wisdom and knowledge that you shared today on the show. Thank you once again.
Lovely. Well, thanks for having me. And it's been an absolute pleasure to be on, and I look forward to doing lots of great stuff together in the future.
Nice, beautiful. Thank you,
Take
guys. All
care.
the best.